Hey guys, Offensive Dube, your currency trader and currency coach at FX Link. I like how that sounds, your currency trader and currency coach at FX Link. Well, thank you for joining me again on our Sunday's weekly market preparation, and hope everyone had a marvelous weekend. But as you know, in a few hours the market will be back in play and is back to work for us. Please guys, whatever I'll be sharing with you today is my opinion and my opinion only on the exchange market. Please, and a big please, don't ever trade money that you cannot afford to lose on the exchange market. Don't come in the market and sell your house and like, no, a friend told me to sell, I sold my house in this. No guys, please just be responsible while trading. And with all that being said, today I have a few projections to share with you, where we'll start off with the pound Canadian and the pound yen. So without wasting any further time, let's get straight to it. So as we get on our daily chart on the pound Canadian, it's pretty clear that the market has been in an overall uptrend. From this level of structure, this price action managed to shoot up. Until today, we haven't been able to violate this level of structure. So this gives us a clue that the market is still in an overall uptrend. But as we take a closer look, something interesting has happened in the market. Okay, price action managed to break this level of structure, where this was a significant demand level for us. So once that happens, the next thing I want to do is to look for another structure. Where is the next level where price action is most likely to react? And if we could grab my tool again, this is where I see another level, because price action again violated this level of structure. So two levels were violated, this first level and this second level. So this is the only level, or this is the next level that we might expect price action to react for. Now keep in note that this is a kind of long-term view. This isn't a trade that will unfold as soon as the market opens. This is a broad view, and this will just give you enough time to prepare. Go through it yourself, don't just take my word for it. Track it down, and as soon as everything plays out the way I predict, then you might take the trade. So this is the next level that I'm expecting price action to react for. This is where I'll start looking for a buying opportunity. Now, will I just buy because price action hit this level of structure? No, of course not. So this is where I'll add certain filters to strengthen my case for entry. The first thing is, from this level of structure, I'll take my retracement tool from A, swinging up to A. And as you can see, this is where we have a 786 level. So slowly but surely, we're starting to strengthen our case for this trade. Price action has violated a 618. As you can see, we had a 618 at this level of structure, so we violated that level. So the next key level will be at a 786, back to where we have a level of structure. So right at this area, we could try to draw out a zone, and say for us, as soon as price action gets this level of structure, this will be our kill zone. This is where we'll start to look for a buying opportunity. Now the last thing that I see on this chart is that, okay, give me a minute to clean out. From this A, we have an ABCD pattern. We should also terminate back at this level of structure. So right at that level here, we have a nice structure level. We have a 786, and we have an ABCD pattern completing right at this level of structure. And say that everything plays out as predicted. This is how this trade might look like, assuming that we have an entry somewhere at this level of structure. Of course, stop loss will just have to be a few pips below this area, and you could be looking to take your first take profit back at this, where this past support might become a future resistance. And already you can see that this will be a 2:24 risk to reward ratio. This will be a good trade to take, and yeah, hope you keep track of it. And yeah, so the next pair that all we're looking at is the pound yen. Over and over, guys, you'll notice that we use the same technique to analyze the market. Nothing changed. We use the same strategy, same analysis, and same technique to analyze the market. So let's grab my tool. You can see that this was a nice support level that we were looking at. Again, price action managed to break through that level of structure without any hesitance. What do we do next? We look for the next level that we expect price action to react from, and this is the next level that we expect. And as you can see, at this point, price action is already playing around this level of structure. Now, not only that, looking at close to our RSI, we already have an oversold state. Price action is at a significant demand level, plus we have a nice oversold state. This is an area that we might be looking for a buying opportunity. Now in this case, we could use a different tool. In the first video, on the first pay, we used a retracement tool. In this instance, we could use an extension tool. So from this X, right at this level of structure, let's say we have a 1414, and if I could take this line up, you can see this is where price action is currently reacting. So we have a significant extension level. We have a 1414. At this point in the market, I'm preparing for a buying opportunity. Price action has already hit my demand level, plus I have a nice Fibonacci extension in this level of structure. All I'll be looking for will be a resistance to enter the market. So coming on the hourly chart, this is just where we look for entry reasons. This is where we look for further confirmations. This is how we're looking for divergences, double bottom, and ABCD patterns if I do get one. So the first thing that I'll be looking for is this: from A to B, copy, if I could copy and paste. We have a completion of an ABCD pattern back at this level of structure. So this is a key level that we might be looking for an entry point. Now, in order for us to enter the market, the first thing I want to see first is our RSI at an oversold state. For me to take this trade, after getting a completion of an ABCD pattern, I'll have to get a bullish divergence on my RSI. And if all my filters are in check, then this is where I'll be looking for an entry point. And this trade might look something like this. Assuming, okay, first off, to narrow out, this will be our whole kill zone. Then this is how our trade will look like. Let me put this side. First take profit will be back at this retest of structure. And stop loss will have to be a few pips below the lowest low, which is from this level. So from this level, around 30 pips, we're looking at a stop loss of around 30 pips. And if you're looking for second extend, okay, for the first take profit, you can see this already offers us a risk to reward trade. For a total risk of 32 pips, you are looking for a total take profit of 103 pips. And if you're looking for extended targets to hold on this trade, then you may be looking for price action to retest this level of structure, meaning for a total, you'll be looking for a total take profit of 221. Now, as soon as price action comes in, let's say that everything goes as projected, and price action comes in, hits our entry point, and pushes up, hits our first take profit. We'll have to wait for price action to break and close above this level of structure. If price action breaks and closes above this level of structure, this is where then you will be looking to break even, so that you're not risking any more money. And this is where you'll be holding on, waiting for price to hit your second take profit. So this is what I had to share with you today. Hope everyone will have a profitable trading week. So for me, your friends, no do it.